Hey guys, Mike DeSepoli. Thanks for joining us for Ask the Advisor 65. So this is the question that we get a lot every time the markets go through a little bit of a fit or emotional phase like we're seeing now. How can I protect myself during a market downturn? So we have a couple quick tips for you here today. First and foremost, keep the fundamentals in the forefront of your mind. Fundamentals being, what does the economic backdrop look like? What does the business environment look like? What does the regulatory environment look like? Right now in the U.S., things are pointing in a positive direction. The economy is growing, tax rates are falling, job growth is rising, and we're seeing wages on the pickup as well. That's not the type of backdrop that starts the next bear market or economic downturn. Number two, if there is a downturn in the market, try to understand what the cause is if there is one. Not every time the market goes down is there a valid cause behind the movement. Sometimes it's just markets undergoing normal cyclical phases. Over the last week and a half, we've seen a different narrative every single day about why the market's going down. First, it was trade war fears. Then it was about tariffs. Then it was China. Then it was the Facebook data scandal. So when you see the narrative shifting like that day in and day out, quite frankly, it tells you that people have no idea why the market's going down, and that's okay. We don't always have to have a reason to pin on the market. Sometimes they need to pull back just to consolidate their gains so they can move on to better levels. So keep that in mind. Number three, volatility. It characterizes these wide swings that we see up and down in the market. That's volatility. You got to understand that volatility is like grapes. It comes in clusters. So we generally don't see one day of volatility in a 30-day month. You see these little clusters a couple days at a time, maybe a few weeks at a time before it runs its course. That's okay. Most investors hear the word volatility and they think of loss. And that does not have to be the case. Volatility also works to the upside. So just like markets can swing down violently, they can also swing up violently as well. Number four, just a personal word of advice is to eliminate the words points or dollars from your vocabulary when you're assessing your account. It's all about percentages, right? We want to put things in percentage terms. You don't want to talk about how many dollars you're down or how many points you're down, because perspective always changes. As an example, Dow 24,000, as we're at right about now, if we lose 500 points, it's a much different effect than if the Dow lost 500 points when it was trading at 20,000 or 15,000. So if we put it in percentage terms, it keeps things in perspective and it will help you be less emotional about it and stay on track to hitting your investment goals. So it's much easier to say I'm 2 or 3% down from my all-time high than saying I'm $20, $40, $50,000 or whatever it may be. Less painful, less emotional will help you stay away from making those bad decisions that are usually emotionally driven. And the last and final tip, guys, if you feel the need to make any strategic changes to your portfolios during times of a market downturn, do so with the basis of sound advice. Consult people and professionals that you trust and make sure that that move is still congruent and keeps you on the path towards achieving your long-term planning goals. Don't make a move based out of emotion. Most investors that lose money in the market, 90% of them are driven by poor emotional decisions because, look, nobody likes to lose money, and when you see your money fluctuate in the market, sometimes it's tough to have the stomach and to have the grit not to do anything. Thank you guys for checking out this tip. If you know anybody out there that could benefit from this advice, please tag them in the comments below. Share this video with them. We always want to make sure every investor is well taken care of. We'll see you back next week, episode 66.